Hey everyone, so I hope everyone had an enjoyable Christmas day, and now that we're back with the markets, let's take a look at this pretty significant move on SPY or the S&P 500. We are looking at the yearly chart. So what you can see here is that we do have a support line that is around 234, 235, right? And what you can see is we've actually definitively bounced off of this level today, really confirming the fact that this is a support. Now, where did this support come from? Obviously, you can't see it from the yearly chart, but what you can see is if I pull you to the 3-year weekly chart, that this does correspond to previous support levels and the 200 period moving average, right? So today was a pretty nice move, but remember what our theme has been for an up move is really sustainability and continuation. Without sustainability and continuation, this is likely just a one-day wonder, and if we start retracing back to SPY 235, 234 again, then we will be monitoring for a break of this level. But so far, so good. So let's go back to the yearly chart and see that this is really, in my opinion, the line in the sand, right? 233.76. We bounced off that level, and now we're heading up. Now, the question is, where is our resistance level? And what we can see here is that the resistance is around SPY 256, around that vicinity, because in that area we've held as support, but there's certainly, in my opinion, some more room to climb. Yes, we recovered $13, around $13 here on SPY today, but we have around $10 left to go before, in my opinion, the risk really starts pounding up, and just be careful in this case. So while I think this is likely a short-term bottom in the future, it doesn't negate the fact that we can still come back down to that level and retest it at some point in time. So if you were looking at the markets today, you saw the Dow rally to over 1,000 points. And when do you actually see that? We don't see that very often when the Dow is able to rally 1,000 points. Just showing you how oversold we were. But the good thing here is that the support level has held today. We're looking for continuation into the close tomorrow, into the close Friday. So anyways, if you all enjoy these videos, please hit the like button, and I highly appreciate it. Thank you everyone for commenting, but it's a wild market out here. Yeah, let's stay in the driver's seat and just follow the trend. In my opinion, sometimes it's difficult to follow the trend, especially if the markets are dropping and you're thinking about looking for the bottom. And you can imagine, right, how many people, when we were dropping, were looking for the bottom. Many people. Almost everyone was looking for the bottom, but the bottom wouldn't come, even when people were expecting a quote-unquote Santa rally. Well, Santa came a day later, and so what you can see is we didn't get a Santa rally, but the day after we did get that rally. So looking for this to continue in the future. Now, what's interesting about this also is here's TVIX for volatility. What you can see is TVIX made a pretty nice sustained stand up to the fact of upwards of $81 today, and made it high in the near term, at least, of $81. Now, did we ever see the capitulation volume that we wanted to see on SPY or broad markets? And the answer is no, we never got that. So hence, this is overstretched. It's coming back down, but it can certainly, in my opinion, make a run for it again once SPY does get near that resistance area, like I talked about. So TVIX, I think short term could be going down just a little bit more. Okay, so this is interesting as well. So you've heard me talk about crude oil and the crude oil mindset, in such that if crude oil isn't pushing higher at this point, markets are also unlikely to rally higher. They almost go kind of hand in hand nowadays. But what you can see here is that crude oil was really leading the charge back to the upside, right? We saw crude oil, in my opinion, pull up 5% today, 3%, 4%, 5% today, when the markets were still relatively stagnant early in the day. So from crude oil, what you can see here is I have several support lines set up. We undercut the support line, but you can see today, what did we do? We actually closed right at my next resistance line. So just be cautious. Let me take you to the intraday chart of crude oil. A 10% move today by crude oil. Pretty welcome sight, I agree. But let's see if this can continue in the near future. We're at resistance, so you got to take that for what it's worth. And even though we have a 10% run, can we retrace a portion and move back before moving higher? Yes, we can. So just be cautious. But so far, so good for crude oil. This is a pretty nice candle. But, this candle, it really needs to play out. Remember in the past for crude oil, what were we looking at on the yearly chart? Well, we were looking at the 20-period moving average sloping down, right? And we said that if crude oil can't close above that level, then it's likely to continue its bearish tone. So right now, while we have a 10% rebound on crude oil today, are we over the 20? And the answer is no, we're not. Ironically, the 20 is still above us, around 49.70. So that's still $3 away. So, got to wait for this one to really start rallying hard, really into the end of the month and next year for us to see some dramatic improvements, let's say, in crude oil. And that's crude oil for everyone. Take a look at natural gas. Now, here's natural gas. You can see that we've gone down, down, and down. And in the last video, we talked about how the natural gas probable trajectory, just based off of this pattern, is to the downside, right? And what you can see here is we left off that over here, I believe, and it was consolidating sideways, and we did drop. So same story for natural gas. Unless you can close, in my opinion, over the 20-period moving average, natural gas is likely to continue dropping. But the thing about this is, you can see we have support zones, pretty strong support zones down over here, right? So we're getting into an area of strong support for natural gas, so I wouldn't be surprised at this point to see some sort of bounce. We already saw some sort of bounce today, intraday, from the natural gas support zone. Wouldn't be surprised to see that bounce even more in the near future because of where it has tested in the past. And so right now, I think we're really getting clogged out between the support zone and then your resistance area. So here, just got to watch it for it to play out. I think this was the easier pattern to short natural gas, but now the risk is a little bit higher, in my opinion, as we're nearing support zones. Also, if you like these videos, if you find these videos helpful, there's so much more in the course that is in the link in the description box down below. Check it out if you haven't already, and see if it is something that will help you in the future. It really, in my opinion, you get to talk to me on Discord, and there are several videos really to help you understand the markets, how to analyze the technical patterns, and come to our group. We'll be glad to have you. We talk every day in terms of markets. So, all right. Lastly, let's take a look at 4/GC or gold futures. So for gold futures, what you can see here is now we've closed what? Above the resistance level of 1267, and today we tested the previous resistance as the new support. Now what you can see here is that the next resistance is 1286.5. So gold got close to it actually today before it came back down off the support level. So we've talked about this. This hasn't been changing. Gold continues to be bullish until said otherwise, right? Because this is an uptrend. We've been monitoring this for quite some time. This continues to push higher. It continues to validate support areas as we expect it to. So nothing has changed. This is a prime example, in my opinion, of how technical analysis just works. And you're like, well, how does it work? Well, it can help. It doesn't definitively tell you where entry or exit points are, but it helps you in terms of how to manage the risk. Where is the point of entry in which there's the least risk, right? So here's your support zone right here of 1267, and then 1286 is the next resistance. So far, this is continuing to be bullish and looks good. So I know everyone has a lot of tickers, but right now, what we have to do is monitor for continuation with the markets. If you just scroll down my list, some of these stocks, it looks good. I agree. It looks nice. We had pretty much all the sectors rising today, but can we sustain that? That's the big question for tomorrow and Friday. Until then, thank you so much for watching this video, and I will see everyone soon. Enjoy the holidays, and happy trading.